I keep hearing the quiet part. Record cash on the sidelines. Dry powder stacked high. Headlines ask what it means. But silence doesn't mean nothing is happening. It means the homework is being done. I wait. I measure. Then I move the way a farmer watches the sky before planting. There's a number that tells me when price stops arguing with value and when that flips from red to green, maybe turns into buy. Not a magic chart, not a secret formula. A simple, stubborn gauge that doesn't lie when fear gets loud. Stay with me and I'll show you what I watch, why it works, and how to use it without guessing the market's next mood swing. Here's what you'll get. Why holding cash is not laziness. It's optionality. And optionality is speed when it counts. How price wanders away from value and snaps back like a rubber band. The number I trust to separate noise from opportunity, defined in plain English. A small playbook you can run, watch list, buy zones, a cash leap size to your nerves, and a way to scale in without drama. We'll face the big objection, cash loses to inflation, and answer it with arithmetic. I'll walk a quick example so you can see the gears turned. No predictions, just process. Confidence in the method, humility about the future. You've seen it. Record cash levels, loud CPI prints, endless debates about rates. The temptation is to always do something, but the goal isn't activity, it's readiness. Businesses are streams of cash protected by moats, sold at prices we either accept or decline. When the gap between price and value is thin, patience is your edge. When the gap widens, speed is your edge. A big cash pile is not a mattress. It's a spring, compressed, waiting for weather worth planting in. The question then isn't when will something happen? The question is, when does the number say the odds are on my side? That's the turn I care about. Cash isn't an opinion, it's permission. Optionality means I can say no 1,000 times, then yes once, with size. In calm markets, cash earns little. In rough markets, cash buys time, leverage, and terms. Sellers need relief. Liquidity vanishes. Strong hands name the price. Speed matters because windows open and close fast, and optionality turns patience into power. I'm not trying to hit the perfect tick. I'm trying to buy the right business at the right discount while others freeze. That's the job of cash, not to look smart every day, but to be decisive on the day it matters. Value is the farm. Price is the quote the neighbor shouts over the fence. They wander apart, sometimes far. The fat pitch shows up on a good business. The durable moat, honest incentives, cash that piles up, gets priced for a future worse than the one it will likely live. I don't need 20 ideas. I need a few I truly understand. The number helps me judge when pessimism is already embedded in the tag. Think thermometer. Too hot, walk away. Cool, get ready. Cold, bring the bat. I don't forecast the weather. I read the temperature and plant when the frost breaks. Markets don't fail because math is hard. They fail because people are human. Fear dries up bids, spreads widen, stories get louder as signals get quieter. That's when multiples compress first, sometimes before fundamentals change. Later, as nerves settle, multiples expand. My edge is simple. Buy cash flows after fear has done most of the compressing and let time repair the multiple while the business compounds. The number I watch filters the noise down to things that don't lie easily: owner cash generation, reinvestment runway, pricing power, against the price I'm asked to pay. Quiet arithmetic beats loud narratives. Here's the gauge: owner earnings yield. Owner earnings per share divided by the price you pay, not headline EPS, not EBITDA gloss. It's the cash a real owner could pull out after upkeep and before dreams. I track the yield and I judge the moat and runway beside it. If the moat still holds, if reinvestment returns stay high and the owner earnings yield clears my hurdle, that's green. In fear, the yield rises as prices fall. In euphoria, the yield thins as prices stretch. Tie that yield to your buy zones. Tie your sizing to the depth of the discount. Humble math. Hard to fake. Do the work before the storm. Keep a prepared watch list of 10 to 20 businesses you'd love to own. Know their moats, their normalized owner earnings, their warts, set by zones, not single prices. Begin at this yield, lean in deeper here. Build a cash sleeve size to your temperament, enough to act, not so much you itch to act early. Scale in. First bite small, next bite's larger as the yield improves. Put it on one page. Date it. On red days, read it aloud. Panic erases memory. Paper remembers. Then wait. Watch list saves time. Zones save nerves. Cash saves the day. Yes, idle cash trails inflation in quiet times. But I'm not holding cash for yield. I'm holding it for yield on opportunity. If once every few years I can buy great cash flows at 30 to 40% off, my long-run return jumps far more than the couple of points I surrendered while waiting. Inflation punishes still money. Panic rewards ready money. The trick is paying the toll of patience and collecting at the bridge of opportunity. Discipline is the toll. Price is the bridge. Say no to bad pitches. Save your swing for the fat one. And that's how cash beats inflation. On the swing, not the sit. Picture a sturdy consumer compounder. Shelf space wide, pricing power intact. In a storm, the multiple slides from 22 to 14. Headlines scream, funds sell what they can, not what they should. My watch list says fair at 18, wonderful at 14 to 15 on owner earnings yield. I've kept a 20% cash sleeve. Felt silly at times. On the ugly open, I staged 3 resting orders across my zone. First fills early. Second fills on margin calls. Third fills when a rumor hits. A few weeks later, fear fades. The multiple retraces toward 17 to 18. I own a compounding machine, bought at a pessimism price. Entries, never all at once. Let volatility work for you. Sizing, be big where conviction meets discount, small where one is missing. Diversify across unknowns, not across names. Stops, fundamentals, not ticks. Sell when the business case breaks. Moat damage, incentive sour. Secular shift you can't price. Exits, trim when price races far ahead of value and reinvestment is thin. Don't milk the last drop. Hygiene, one-page thesis, signed and dated. Review cadence, watch list monthly, zones quarterly, theses yearly. Simple beats clever, process beats mood. The market will tempt you daily. The checklist will save you hourly. I don't need to predict the rain. I need a roof and a plan. Optionality buys me time. The number buys me courage. When price stops arguing with value, the yield will tell me, the moat will back it up, and my cash will finally have a job. That's how quiet money moves. Slow to anger, quick to act. If this helps, stick around. Next, I'll break owner earnings yield into simple steps and sketch a tracker you can use at home. Educational only, no advice. Just the work, done patiently, when it matters most.